We're a hotel, mostly brokers. We sell hotels within Europe. Myself, I co-head the Pan-European transactions team. So we see Europe as a country and not as plenty of different countries with plenty of different cities. And I've been with JLL for now more than 7 years, and I've always been doing that.
Okay, but you did say something about you only like to represent the occupiers, which I thought was... Could you just explain the audience why you like to do that?
Oh, so my team within JLL only represents the sellers. The reason why...
the sellers, I beg your pardon. Yeah.
Correct. The reason why we tend to do that is because, one, we love to help them and we think that we can, show them the world in the eyes of the different investors, but also because in terms of execution risk, you're much better having 3, 4, 5, 10 buyers and one deal to sell than having to back one buyer and never knowing whether he's going to be the one or not. So in terms of execution risk, it's much easier to sell a hotel than to buy one.
Very good. I thought that was interesting, just to get out there, really. Perhaps, Michelle, now, you could just tell us a little bit about yourself.
Yes, I'm Michelle Weiss. I'm heading the hotel team at Aareal Bank. Aareal Bank is a commercial real estate bank. So basically we're senior lender of commercial real estate. We have a hotel team in our head office in Wiesbaden, Frankfurt. We're 9 people focusing solely on hotel financing globally, with focus in North America, Europe, and Asia.
Okay, thank you. Thank you very much. And David, he's not going to say this, so I'm going to. It says in the Chamber's 100 business lawyers, he's the best legal mind in the country and the one you'd want on a deal. Right, can you follow that?
Thank you, Peter. No, I'm partner at Paul Hastings, responsible for corporate real estate in Europe. And we act for a range of different pots of capital. We've got private equity, institutional hotel funds, REITs, hotel-specific investors, investment banks and operators. So we see hospitality in the context of all the different sort of range of interests. And our work is very much cross-border, so we do a lot in Europe, probably more in Europe at the moment than the UK, but still finding it a very active market.
Okay, thank you, David. And now we'll move to Andreas.
Yeah. First of all, I do go along with Patrick. It's indeed so much easier to sell than buy, particularly at this time of the cycle. And I think we'll touch down on this later on. Good morning, everybody. My name is Andreas Löcher. I'm heading the hotel investment team with Invmt. We are institutional and retail-backed investors based in Hamburg, Germany. We have an entire real estate exposure of around 37 billion euros, or 35 billion euros, sorry, in that area, of which around 10%, 3.5 billion is invested in hotel real estate. We've got 16 different funds, of which around 8 to 10, depends on the year, are interested in investing into hotel real estate. And really, depending on the investor type, we are looking at a variety of different assets. So last year, we acquired in secondary German cities like Aachen, beginning with A, but then also invested into big cities in the US like Boston with B, or Chicago with a C. So we have a great variety, and in order to serve our different funds, starting at around 20 million euros and going up to maybe 300 million on a single asset basis. We are regulated by law so that we can only do lease agreements. We try to be innovative here in order to accommodate all parts and parties in a deal. Yeah. Okay. And I think we'll talk about that later on anyway.
Andreas, thank you very much. And finally, last but not least, Asli, tell us about yourself, and you can slip in a bit about Rwanda if you like.
I won't take much time, but anyone wants to talk about Rwanda, I will be available a little bit after this panel. I'm Asli. I work for Cycas Hospitality. We are a extended stay hotel company who also specialize in dual branded hotels. There aren't many of us around who represents international brands in Europe. So I'm today quite proud to say that we are the largest franchisee or operator of Residence Inn by Marriott and Staybridge Suites by IHG outside America. And we established our company about 10 years ago, and today we have, as of Monday, we have 9 operational hotels and 9 under either construction or about to go into construction, and covering UK, Netherlands. Hopefully soon we'll be signing a deal in Brussels with my colleague there. And our next big target is, of course, Germany. And hopefully on that C, it will be added after Chicago, Cycas, in your investment portfolio, hopefully.
Yeah. Top of the list.
Yeah. So we started our life with, most of you probably know, Patron Capital, and followed by MNL, which is a big Singaporean family office. We also have currently 4 hotels with Starwood Capital, and signed another deal with a German competitor of Andreas recently. So we can cater, bring the extended stay hotel brands and concept into Europe with international brands, and also be able to show the profitability and that alternative asset type into different portfolios of different type of investors.
Asli, thank you very much. We'll talk about Rwanda later. I think the first question really is a sort of obvious one. I think there was an event here 12 months ago, and it would just be useful to very quickly get some views on what changed over the last 12 months, and then we can drill down into them a little more afterwards. Patrick, would you like to, you briefly mentioned it, but could you just say what's different now than 12 months ago?
I think like what's different in terms of hotel investment, fundamental-wise, not much has changed except for the fact that investors are now looking much more actively at Italy, at Greece, so at markets where historically they were more reluctant to go or less, less excited to go to. And I think a big change that we're seeing is, and we saw it last year, by the way, is how much politics is influencing our business and how much politics is really influencing our business. So when you look at volumes, you would think maybe not that much, but when you look at the investor behaviors, then you can see that it's actually more present than not, and then some of them choose to ignore it and some of them don't.
Okay. Michelle, is politics affecting your view on the cost of debt and things like that?
I mean, obviously, politics does impact the way we work, and
I mean, in the last 12 months, you're going, oh, it's a bit more risky, or that's a bit less risky.
Of course, we're looking at various, obviously, these things impact us. I mean, I think a year ago we were here and there were great uncertainties. Brexit just happened, the US election was in front of us, etc. Yeah. I don't think we have more security now or more certainties, but I think we've gotten to live with it.
Yeah.
Of course, Brexit, etc., that impacts us. We're still, focusing. We're still active in the UK, but we might be slightly more picky. So, of course, these things impact us in that.
So there's a sort of Brexit premium, then, is there?
Well, I think it's more what the whole Brexit means to UK in general and the UK economy, and how that impacts the refinancings and investors' sentiment.
Okay, all right. David, what about you? Is your billing up or down on a year ago, or has it changed, or who are you dealing with now that you didn't deal with 12 months ago? Obviously, we'll take the fact your billing's gone up.
Absolutely, yes. Well, our work in progress has gone up. Anyway.
That's good. Yeah.
I think really sort of similar trends to which Patrick and Michelle identified. Really, I mean, we've seen private equity funds have become probably a bit less competitive in the marketplace in terms of securing new deals, in terms of based on their cost of capital, and that has led to them looking to do deals in Italy, in Greece. We've got a deal in Greece at the moment. I think there have been 4 deals in Greece in the last 6 or 8 months involving Oaktree, Henderson Park, and interestingly to a Canadian REIT, Fairfax, and Mgmt, so more institutional capital. So that is definitely a driver, and obviously they need to be careful. The more east they go, on one level, there's an argument you should keep to more core property because you've got to take into account what the circumstances will be like on exit. We've seen more, as Patrick says, a lot more sort of institutional capital coming in, syndicated equity, hotel funds. We've seen some of the private equity funds not seek to reinvent themselves, but to set up different pots of capital, which have lower return requirements. For example, Starwood's out there raising, which is in the public domain, a listed hotel fund. Blackstone have set up a so-called private REIT, which is focused purely on the hospitality market, which has a low return requirement, and has already raised $1 billion, and some other people doing that. So that's going on. We've seen the general feedback we get from clients is that there's more caution about the UK than Europe, and exits are more complicated than they were assumed to be, say, maybe 18 months ago. People have had to change disposal strategies, so whereas the assumption was you aggregate portfolios and sell at a premium, some of those portfolios have been broken up. And the feedback we're getting is that there's evidence of some pricing coming down. So, for example, 12 months ago, there were deals being done at 14, 15 times multiplier of the EBITDA. And the Q Hotel deal done recently, which took some time to get completed, was done at 11 or 12. Now you could say, well, yes, but the EBITDA is higher, so the cash sum is not proportionately smaller, and it's a question how you calculate the EBITDA. But certainly, we're seeing some sort of complications in that process.
Okay, just with your sort of legal hat on. Is there any changes? Do you when you're talking to a client now about a deal, let's say a great big one, the sorts you do, are there any legal implications now that you weren't talking about 12 months ago?
I don't think any sort of fundamental change. I mean, there's probably more focus on the potential for tax leakage during the life of the investment hold period because of all these different initiatives from revenue authorities, the so-called BEPS, base erosion, profit shifting, where they're homing down on availability of cash flows, they're putting limitations in different countries on interest deductions based on percentages of EBITDA, and these sort of hybrid instruments where you get an asymmetry between tax treatment on one vehicle and another vehicle, they're closing down on. So you have to be quite careful in terms of what assumptions you're making about tax leakage and the efficacy of any tax planning during the life of the fund, and possibly run different models. But I think that there's that. I mean, other than things which are just specific to individual jurisdictions, I don't think there's a generic change in sentiment.
Okay, thank you very much. Thank you. Andreas, last 12 months, what are you doing now that you weren't doing 12 months ago?
Okay. Well, first of all, I must say exactly the same venue 12 months ago. The weather was not that good as it is today. So weather has improved. And also, I would say yields have of course, obviously declined, and markets have been soaring tremendously. Also, on the performance side of hotels, as we've seen, with the numbers of practically nearly all markets have considerably improved, but at the same time, uncertainties are rising. Political implications, which we touched on earlier, are really getting more and more important, unfortunately, as well as terror, which is the saddest factor of all. And at the end of the day, well, it still comes down. There is so much liquidity in the market that still the trend is continuing, and there may be one or the other event which may make a potential bubble to burst. For instance, it could be a slightly increase in interest rate, which could have an impact. For instance, I would regard the situation at the moment as much more fragile, even at a higher level than last year. Because of the topics I've just mentioned, the uncertainties. And therefore, I would say if you're investing into hotel real estate, you really need to be smart, be clever, be quick, and trying to not go follow everybody in bidding processes where prices are really optimized and paying the highest price in a bidding process of where 15 other parties participate. And so these aspects are really, further increasing the price levels and putting a lot of further pressure on the yields. So be cautious of that and be smart.
Now, Andreas is trying to scare you so he can win more deals. I don't know if you noticed, but this is what he's doing now.
Got your sell hat on there.
Well, Andreas, just one last one from you. Just if it's possible to do this, is the answer today. If a deal was done think of a deal you did last year and think of a deal you're just about to do. Can you describe the yield compression that you've seen in 12 months in basis points terms?
Well, it very much depends on which markets you're looking at. So,
yeah, sure.
For instance, in Germany, I would regard the yield pressure as the biggest one during the last 12 months. It could well be.
Can you quantify it? How much has it dropped?
It's always difficult. You'll be quoted in a newspaper.
I know, that's what I'm asking.
It can be 50 basis points, for instance. So really very much depends. What do you think, Asli? Would that be a good?
I agree.
Yeah.
Yes.
Yeah, thanks. So I'm not alone with my statement. So it'll be around 50 basis points, maybe.
That's
maybe
over the last.
Could be a very rough approach. I could be
over the last year.
Definitely London.
Yeah.
In London as well. Okay.
Yeah.
Okay. All right. Well, that sort of brings us on to, if we could just concentrate. I know this is a very cosmopolitan audience, but if we could just concentrate on the UK just for a bit. Did you have a question, or were you just? No, you don't. Right. Okay. Just let's stick to the UK for a minute and Brexit. Now, we've seen what's happened. We're sort of, God knows what's going to happen. And so anybody on the panel really can pick this one up. What's happened in the last 12 months? Michelle's talked about a Brexit premium. Anybody else? Asli, what do you think?
From my operating hotels point of view, it's been great. The fact that with Brexit came with the cheaper sterling, and we have seen some much vibrant transient tourist footfall in London, especially.
Oh, okay.
And the rest of the UK. So it was pretty incredible actually this year. Pretty much none of my hotels in London was accepting me to stay whenever I turn up in London because they're fully booked. In that respect was great. I think the only thing about Brexit, and especially being an extended stay market and really relying on corporates, clienteles feeding us from the city, from Canary Wharf, and etc. The uncertainty is that what's going to happen in terms of we keep hearing stories or actually seeing that all these big boys in the city moving their sports teams outside London into different cities, not moving their HQs but the sports. And that's of course our bread and butter in our business, and we're sort of trying to understand what's going to happen, what's going to replace that, and trying to be more tactical and strategical.
Yeah. No, but nobody knows what's going to happen, do they?
No.
I don't think.
No, but very just simple math is it made it for foreign. So it's very. There are three types of investors. There's the I don't do the UK. There's the I want to do much more of the UK because it's much cheaper, and then there's the I don't know what the hell is happening, so I'm tiptoeing and maybe I find a great deal and go for it.
Yeah.
But actually, from a European perspective, for example, the hedging costs are higher. So as such, you can pay less to acquire an asset because you have this that comes and includes itself. So you have some levers that basically you can influence, which is, or you can make an opinion of, which is it positive, is it negative, is it neutral? And then you have some levers where you don't have any hand on, which is your hedging costs and so on, which just impact your capital.
Yeah. Okay.
But I agree with Asli. Fundamentally, the London, the market, and the UK, they have initially now benefited from Brexit in regards to the exchange rate being so low, hence more tourists, etc., coming. So, but obviously uncertainty remains, and as you said, no one knows because
so why
no one knows
are you
what's
charging a bit
happen.
more for your money then?
No, I think that's.
Okay,
Fair amounts.
It's in general the market. It's.
But you like it here. I mean, it seems to me that what we've got here is lots more people are coming, and therefore that's buoying things up. But on the other side, you've got lots more worry about what's going to happen in the future, which is pulling things down. Is that sort of basically what's going on here, is it?
Yeah, I think we're seeing a bit more focus on, I think originally with Brexit, there was a lot of focus on the potential opportunities through currency depreciation, etc. And now perhaps a little more focus on the uncertainty of what Brexit means, which is perhaps natural as you get nearer the process.
Yeah.
And the concern that people will have to implement decisions at an earlier stage before we know what's going to happen, because they have to make assumptions as to what is going to happen.
Yes. Yeah.
But I think the concerns that we've had expressed is partly just on operating costs of hotels and imported inflation is a potential problem. Also, hotels have a lot of sort of overseas staff coming. So again, there's a slight concern about that in terms of how hotels will man themselves.
Yeah.
And again, I think we've seen a distinction placed between London and the rest of the UK, because I think there is an increasing concern about the UK consumer going forward in terms of things like inflation and wage growth not correlating with inflation and perhaps lack of growth for people deferring decisions. So we're seeing a bit more focus on the uncertainties of Brexit than we did, say, 6-8 months ago.
I mean, lawyers are great for having what-if clauses in their contracts now, and I wonder whether you have what-if clauses in contracts now. What if Brexit doesn't happen? What if Brexit is hard? Or
Not really. I mean, I think what we did before the referendum, there were sort of walkaway clauses, but we have seen people in terms of like where there's an allocation of cost on a development project, and that project is going to straddle the implementation of Brexit. If you like, a clause allocating the risk of any increase in that cost consequential upon Brexit. Yeah. So the parties say that's a known unknown. How do we deal with it as a risk between the parties?
Yes, okay. Anybody know what's going on in China on the panel?
I mean, our house view is that until the 19th Congress has happened, anything that you hear is like buying stock on the stock market. You wait, you see it's up and down, and until something happens, you know whether it's really up or really down.
Yeah.
And for us, that's how we see it. So we still see investment coming from Hong Kong, way less from mainland China. If it comes from mainland China, it's mostly high net worth individuals rather than the usual, big institutions. But they're all waiting for this 19th Congress to know.
When's that, Patrick?
It's in October. It's meant to be in a couple of days.
So this is what you have to watch out for. Is what's happening there.
Yeah, what's the direction that the country's going to take?
I mean, we have seen some impact on, because I think a lot of, particularly private equity funds' exit strategy was to create a portfolio and exit into the Chinese market. And we first saw a complication almost about a year ago around this time, where there was a problem. If a deal was over $1 billion, they had to get additional consent.
Yeah.
So there was actually a sort of delivery risk with contracting. When we saw, for example, a deal fall through because they weren't required to get that additional consent, and then that requirement reduced from $1 billion to 500 million, and in certain cases now is down to 100 million. So there are these sort of controls which are being imposed at the moment.
But they seem to get round them. There was one enormous development deal recently where the guy just got somebody else to buy it.
It depends on where, as Patrick was saying, where the money is. If the money is already in Hong Kong, then you're outside those rules.
Okay.
And there's also quite a lot of high net worth Chinese money in Singaporean funds, some which are almost exclusively funded by Chinese investors, and Cayman funds. So as Patrick said, what we're seeing is deals with more of those sorts of investors, which are effectively wealth managers who they have their target return requirement for their investors, which is partly income driven, because the Chinese now are very conscious about, becoming more conscious about pension provision the same way as Western investors. So as long as a deal triggers that return for them, their pricing methodology is slightly different than maybe some other investors, in a sense.
It's basically get the money out pricing methodology.
It's not just China, it's also
It's everywhere,
South Korea at the moment.
Oh, South Korea. Oh, yes.
Is damaging the market.
Are they? Because they want money out in case they get bombed.
And we just seen some city money coming into this.
Have you?
Oh yeah, and it hurts our business because we as a we have no power against that kind of money to put
No.
a sensible investment model on the table, trying
Okay.
to pitch for it.
All right. Well, look, it sort of segues into the next sort of bit of questioning, which was about the politics and the instability. First of all, if we could just have some comments on where you know, which are the better countries, but what are the countries that have become more risky in Europe, to start with, at least, in the last few... Spain, for instance, is that people going, oh, what's happening in Catalonia?
Well, Barcelona had the hotel moratorium since the last elections, so that's a couple of years. They haven't been given any hotel licensing within the city centre.
Because of this? Because of...
No, well, it was the change of the Barcelona has changed the governmental system, and they're quite anti-tourism and anti-capitalism, so therefore they pretty much stopped any licensing for the city. And
Sorry to interrupt, because the way we see the moratorium is because there was a lot of 1-star and 1.5-star and hotels that were popping up, a lot of non-conform hotels, they were converting residences into hotels. They were doing silly things that the government said, stop everything. But they still granted licenses to the bigger, better projects. And they did reduce the moratorium area from somewhere that was much bigger to an area that is much more. So the way we see the moratorium is the government doesn't want this, pushing people out of the city and converting their apartments into little 1-star and 1.5-star hotels, but way less of we don't like tourists, because I think they do live on.
Well, yeah.
Can we move, we've got a lot to get through, so I thought I'd like to move on to Turkey and not ask Asli to start with this particular question. Perhaps the two bankers would go for it. There's a lot's gone on in Turkey over the last year. A lot of bad stuff seems to be happening, and presumably Turkey's a much riskier place than it was 12 months ago, is it? Michelle?
Definitely. I mean, Turkey, look at the performance. Performance has dropped significantly. Sorry. So, I mean, Turkey has been impacted significantly by the events, political events that happened a year ago. Performance has dropped. Consequently, values have dropped. You see a pickup, so I think there's a trend into the right direction. But definitely, Turkey has been impacted.
Is it still too risky a place to go in, even though the prices are falling, or is it time to go in?
I think we said that currency costs are very high, currency hedging costs are very high there.
Yeah.
But anomalously, I think there's quite a lot of new supply in hotels coming in Istanbul, for example, from when the project started in a different sort of economic climate. And of course, there's less tourists into Turkey because of terrorism, and a lot of Russians had a high tourist content from Russia. Russians don't go there now.
Yeah. Okay.
I think it's important to look at the predictability, and investors, they are shying away if certain trends are not really reasonably to be argumented. So it counts for the Brexit. Nobody really expected Brexit to come, and then it's, of course, in the first place, shying away investors. Now they are coming back, and we'll need to see, where it takes us. It is the same with Catalonia. Uncertainty is not good for an investment environment, and the same counts for Turkey.
So are people making money in Greece, for instance, now, where it was really uncertain, and now it's okay? Is everybody going back into Greece?
Well, yeah. Whoever used to go to Turkey is not going anymore. Is going to Greece at the moment. I will not. Just as a Turk, the only thing I can tell to the market is that I will not invest my own money until after the elections in 2019. It's a false economy followed, and 1 out of every 5 hotels is in bankruptcy today.
Is it?
And the government's still putting money against a false economy. It's trying to inflate the economy and everything until this election. So, unfortunately, I recommend to stay away.
Stay away. Go to Greece. Okay. I've got Africa in the questioning here. I want to slip in Rwanda, as you know. It's about North Africa, to be frank. The question is: North Africa an interesting place to go now, or is Egypt also off the map? Sharm el Sheikh off the map?
I'll be very cautious.
Yeah.
Very cautious. I think East Africa is still, if you're going to go anywhere in Africa, I think East Africa still has a lot of potential. Rwanda, Tanzania, Kenya, and it kind of will be stable for some time.
Yeah.
North Africa, I'll be probably cautious.
Okay. Does anybody else go south of the equator into Africa? No?
We have a team that covers the whole continent.
Yeah.
So I will invite you to get in contact with them if Africa is of interest.
How big is the team? Is it more than one person? Or
Yes, it is more. It's an office.
We have an operator client who is entering into sort of management agreements, hotels there, and entered into a strategic alliance with a substantial investor, and the anti-bribery protocol attached to the strategic was a 42-page document.
Yeah.
Maybe that's a question towards Patrick or Andreas. Do you envisage, or have you seen that happen? People building hotel portfolios and selling at the premium?
Yeah.
The last decade and now.
So from our side, for example, last year we sold the Fletcher's portfolio, and this is exactly what this person did. He saw that there was a sub-institutional category of hotels. He started buying them 5 at a time. He built a portfolio. He went from 1 hotel to 72 hotels. And then we sold his portfolio at a premium, not just because it was a portfolio, but also because he had a great equation on how to run these sub-institutional hotels. And we did the K&K portfolio, where you also had high net worth that started tagging along assets and then creating a portfolio and then letting it go. So it is a thesis that it exists. It's just a thesis in hotel that takes, usually in my experience, up to 10 years to do. So if you're a private equity and only have a 3 to 5 year horizon, it's much harder to just buy 1, 2, 3. You can buy some little portfolios, but it's much harder to build it up, specifically from cash flow organically, than just to buy it.
So is it if you buy them up for just an identity? So if you buy them all up, you don't bother branding them at all. You don't need to brand them or anything.
You could, depending on your strategy, depending on the asset, you could decide what your best route is.
Yeah.
Now, again, in my experience, your best route is typically not to brand them and to let the next person decide what he wants to do with them.
Yeah.
Because it opens up your panel of investors.
Yeah.
Some brands might decide, I love this portfolio, I want to do it. Some operators might decide, well, if I tag along with this brand, I can find a place to myself. So there's no. But in logistics, it's interesting, right? Because you build it and then you get a premium on yield that is direct.
Yeah.
You buy at a 7, you sell at a 5, or you float. In hotels, you used to have a portfolio discount in 10, 11 when there was a shortfall of equity. You now have a portfolio premium because the equity, like in logistics, is there and looking for this.
I do go along with this.
Yeah.
And I think it's a smart way, for instance, for private equity acquiring a portfolio and then flipping it after 3 and 5 years, and doing everything very nice and selling it
But not
on.
spending too much on branding.
Exactly, and then you can also mix some poor dogs into the portfolio, so that's not an unclever idea. And we've seen many deals also in Germany, the Interhotel portfolio, which has been flipping several times, and the price has been soaring each time unbelievably. So it's a great business, and for big volumes in the industry.
Did you have another?
Just to answer on that, the only thing we've seen, I suppose, more recently is that some people have implemented a strategy of aggregating a portfolio to get a premium, but then have actually found it harder to exit that premium, that portfolio at that size, and they've actually broken up the portfolio in certain cases.
Is that because the market's getting harder, or because of
It
what
partly
they had?
goes back to the Chinese thing that they were seen as an exit for certain kinds of portfolios.
Yeah.
Or it's if you've got a large portfolio we've seen with a lot of provincial towns, and you're selling into other parts of, for example, the Far East market, some of those towns they won't recognise. So the view is to take those out of the portfolio and sell them into a local market. And we've seen other people who have fundamentally changed their strategy. So, for example, they bought a portfolio with a view to managing it and perhaps increase the portfolio, and they, because of concerns about their ultimate exit and cycle risk, etc., they've then broken the portfolio up and sold it in chunks within quite a short period of time, but at a premium because they've been selling into like local investor market, local institutional market, etc. And they're actually getting the reverse, i.e. the aggregate of the prices for individual hotels exceeds what they would have got on the portfolio. So it sort of moves around a lot.
Yeah.
David, it makes also, so depending on the portfolio, the assets you put into the portfolio, makes it easier to finance certain assets that you may not get financing or the same financing on a single asset basis. So putting them together in a portfolio, cross-collateralizing them,
you get cheaper money for doing that.
There's limited supply, it seems, in new hotels being built. So I'm kind of wondering if you're moving up the risk curve a bit to development financing. Because development financing, it seems to be the one kind of missing component in its entire cycle across all sectors. And is this something that you're starting to embrace more? Is it different for you guys over the last 12 months? Have you moved up the risk curve? How are you guys looking at that side?
Well, we at Aareal Bank, we're not doing development financing for various reasons. So it's nothing with the cycle currently. We haven't really done it, as it doesn't make sense for us the way we're structured. So we're really only focusing on existing financing. But what we see in the market, there's so much lending out there as there is equity out there, a lot of alternative lenders, and I think it got much easier to find lenders for development financings now.
It's often split, with the financing model, for bridge financing for the construction phase, and then later on for the long term with Aareal Bank, ideally. And we, from our point of view, we are entering at an even earlier point of time now than we did a year ago. So the earlier you get in there, the better you have the chance to secure a potential deal, even without having a building permit sometimes. We do both forward purchase and forward funding, but of course prefer forward purchase agreements. That'll be definitely one of the points where we regard ourselves advantageous over competitors, where we've got a strong, building and
it sounds like
construction
you're not
team.
able to get it.
Yeah.
Modular construction in hotels. Andreas, would you buy a modular hotel?
How would you define modular?
Where the rooms are constructed off-site, manufactured off-site, and assembled on-site, like the sits at M Hotel in Florida.
Not so much. We are long-term investors. We'd like to have a very solid structure, and therefore we would like to have a pretty, well. But I do understand that the model, and it has a great potential, definitely. But we are really long-term investors, 15, 20 years. Our lease agreements are 25 years long. So that's really the game.
And Michelle, would you finance the modular construction?
We have financed citizens.
Yeah. How very courageous of you, I think.
And have you sold another hotel at a premium or discount compared to other hotels?
I don't think we have yet, but because it's quite a new thing, right? Citizen M is pretty new.
Yeah.
But when you look at the investors behind Citizen M, it's actually APG, which is an institutional Dutch fund. So I think it's also a matter of, which pocket of capital buys what. And the question is, how much does it go into the real estate space versus the operation space? How much of it is real estate versus operating cash flow?
Yeah.
Most brands actually now, not just the Citizen M, but like Southampton by Hilton and Courtyard, South Marriott, those are all currently being rolled out in terms of structure, especially.
The Travelodge do it, people like that.
Yeah, and CIM seems one of the largest players, Chinese guys.
Yeah.
They have a massive factory. They're rolling out, turning out these models a lot fast, and they're also financing themselves. So
Presumably it's quicker, and is it cheaper?
It's not cheaper.
It's supposed to be cheaper, yeah?
No.
You think it's cheaper? You don't think it's cheaper?
We investigate. I worked actually in several projects and trying to stack it up. We work with the thing is a couple of things. What's cheap is that you spend less time on the ground, which is a very expensive thing. But actual modules and building, it doesn't really make too much of a difference. If you have a time constraint, you pay that premium. And if you're not close to one of the ports, it actually takes longer as well. So.
Okay, there's no legal implications, David, for these things, are there? You don't know?
No legal, no. I mean, they're all very environmentally compliant, so the operating costs are potentially lower as well once you get it up and running. I mean, the thing I mentioned of the strategic alliance in Africa, in fact, that was all predicated into Aareal. Every hotel was going to be constructed through modular construction. It's partly because it's easier to do in that continent.
Okay.
But I tell you, one very important benefit of modular build is that each room comes pretty much perfectly sealed and quality control and quality check.
Yeah.
So the lifespan actually of the units or the amount of time you spend on maintenance is much less with modular building than traditional building because it's already checked in the factory and every defect.
Okay. We could go on to something very close to my heart, really, which is Airbnb. I live in a block of flats in the city and we're infested with it and we have no legal way of stopping it at the moment, but that's just my grudge, really. I just wondered whether the panel had any thoughts on whether Airbnb is impacting the bottom end of the market, and if so, why and what are you doing about it?
Well, from operator point of view, as a hotelier point of view, I quite like Airbnb because especially for my segment in terms of extended stay hotels, which was unknown in the normal market or with the transient customers, as actually Airbnb start educating people about that there are hotels that you can stay longer and with larger families.
Is that what you've got? It's not familiar to me, a long stay hotel. Can you just explain one of yours?
Yeah, well, we have, as I say, Staybridge Suites, which is the brand for Intercontinental's extended stay hotel, and Residence Inn is the Marriott one. So extended stay hotels in America is about 10% of the hotel market, and in Europe it's barely 2% at the moment. And
you have to be rich.
I think it was opening the mind of the new of the hotel.
Yeah, you have to be rich to stay at them, don't you, presumably?
Not necessarily.
No?
Not necessarily.
Good discounts you give, do you?
4 years especially.
Okay.
Peter,
Yes.
the Italian market has a system of apart hotels.
That's correct. So what you had, actually, probably all of you know that traditionally when you used to go on holiday to Turkey in the summer for a week or 2 weeks or Spain, you stay in apart hotels. So imagine the same concept, but make it in the cities and bit more smaller.
In Milan and Rome and then cities in Florence.
Okay. So Airbnb's a good thing?
I mean, I don't think it's not too bad of a thing, at least. I can say, with Airbnb there's a lot of induced demands and new guests coming into the city, which would not have
so it's added to the market as opposed to detracted from the market.
Exactly.
From the hotel market.
And that in the first place, and the same, of course, I do go along with Asli's commentary on apart hotels, which is now getting a real renaissance and well known. And also, many Airbnb locations have not been really regulated so far, so there'll be much more to come with fire safety, for instance, as well as taxation. That'll be another topic. So these are really things, which at the end of the day will also limit, of course, the growth potential for that.
All right.
I'm curious to know, we represent some energy infrastructure investors. So I'm a bit of an outsider today, coming to learn a bit about the hotel sector.
Do you represent
energy infrastructure investors?
Right,
So,
the power side of things.
Yeah, power.
Yeah.
That's right. And it's changing a lot of different areas of the economy. There's a sort of many people describe as revolution occurring. And I'm coming here as an outsider trying to understand a bit, hopefully from the panel, what impact you see some of the innovations in energy and the investment opportunities that are occurring. Are you seeing any rise in your sector? Is it attractive? And what is your view on that for you as a hotel?
In the shed sector, I shared something yesterday morning on the industrial market, and all they moan about is the lack of power. Is it an issue or not an issue with hotels? And are hotels going nice and green these days?
If it can impact your bottom line, it will impact your valuation, so it's a good thing.
Yeah.
I think to the extent of what we see is if a GM or if the operator has an initiative to improve the energy efficiency of a hotel, and it has a direct impact on the bottom line, you capitalize that. If the hotel's in Paris, you can capitalize it up to 30 times. It's good savings, right? But this is pretty much my interaction with your segment.
It's not a terribly big issue, and unless you're out in the middle of the desert or something. Okay. Dual branding. Now, I went to a hotel last night. This will only take a second. In Langham Place, it's called the Langham Hotel. It's opposite the BBC. And I went to a restaurant that had a different name in the hotel. It's called the Rue at the Landau. So the Rue brothers own it. It's quite confusing because it's not called the Rue brothers at the Langham. It's the Rue brothers at the Landau. And I was talking to Michel Roux earlier in the evening, the Sun, and I said to him, what are you doing here? You're very famous cooks. You've got your branding on the outside of a hotel, because their name's up on the outside of it. He said, yes, well, we're taking over all the internals of this hotel as well. So it seems to me that hotel is turning into a dual brand almost by accident. And the other side of it is, I've heard people say, it's over, isn't it, this having a famous cook branding it, or a famous president of the United States branding it. What's the view of the panel on that? I presume the Trump thing, a negative equity brand now.
I mean, we see sort of enhancing revenue from F&B as an important part of the asset management. So owners increasingly want to have much more involvement in that process, and sometimes under hotel management agreements they actually want to control that process vis-a-vis the operator, and you have a special treatment of the revenue from the restaurant in terms of how it's taken into account in the operator's fee.
Yeah.
So, and sometimes that's by bringing in another operator into the restaurant, sometimes it's by leasing out, so the operator then owns the business.
Yeah.
But I think it's part of, an important part of sort of aggregating the profile of the hotel and bringing people from the street to have a separate entrance, etc.
So it could work for a cook, but when you have the sort of the Tiger Woods Hotel and things like that, this is all. Is this gone? Is this gone?
Well, that's different. I mean, yeah, that's
sort of celebrity branding. Yeah, Trump basically.
Yeah. I mean, the dual brand that you sometimes see is like two brands which are complementary to each other. So one of our clients, Hilton, for example, may have two categories of Hilton hotels together as part of the same development. Yeah. But one is lower standard and one's higher standard.
Yeah. I think that makes a lot of sense. And if there are potential for constructing hotels like 500, 600 rooms, it very much makes sense to split it up into categories in order to diversify the potential guests, who may approach your hotel, or even you just imagine you're staying at a hotel in London or Amsterdam as a business guest in the Moxie, and the location, and the weekend you return and stay with your family in the Residence Inn. So it's got, I think a value add, and that plays into your direction as well.
We're the largest operator of dual branded hotels. With the recent
what are the two brands?
So we started with the in Stratford, on top of Westfield, when it was being built. We built a Holiday Inn and a Staybridge.
Yeah.
I currently soon to finish a Crown Plaza and a Staybridge in Manchester. I'm going to finish my Moxie by Marriott and Residence Inn in Amsterdam in about 2 months' time.
Yeah.
And I'm going into construction of another 3 Moxie Residence Inn dual brands.
So one's a groovy brand and one's an older brand, or?
No, what it is that what we like. So at the moment, obviously, you want to maximize the value of your assets, and especially for developers. If you get an envelope, say 10,000 square meter, you're going to fill up. Just putting a single brand in certain markets is too risky. So if the Westfield deal came to us as a 350 room Holiday Inn, and we say, well, rather than targeting one type of clientele, it made more sense. And
has it worked?
Absolutely, that's why we're doing our 7th now.
And what's the balance? Is it sort of 50-50? Or?
Well, usually 50-50, it depends, but usually your extended stay component is always less than your either full service or your lifestyle.
I see. Same staff?
On the back of the building, yes. So from outside, it looks like we have 2 different hotels. Yeah. 2 different customer profiles,
Yeah.
but on the back of it, they run as one hotel.
Yeah.
So efficiency levels are
Yeah.
much higher, and profit levels are much
Very
higher.
good. I like that. I'd like to try and get some specifics here, and I think it's really which investors that you feel you can name you should be watching. Who on the investment side? I don't mean China, I mean who. And I don't mean Germany, I mean who. So any thoughts on who are the investors that people like to deal with, who are good at it, who are expanding at the moment?
I think from our side, obviously, all of them are great.
Yes.
What we have, what we do, what is very refreshing is the way institutional investors have behaved in the past year and a half.
Yeah.
How they are becoming extremely creative.
Yeah.
To the extent that not only some of them went into the management agreement, but some of them would tell you, I cannot do management agreements, but still send me the opportunity because I can negotiate with the manager better than anybody else and convert it into a lease, put a white label operator, do something about it.
Okay.
I think 5 years ago you would have had this discussion and it would have been binary.
Okay.
Is it a lease? No, not for me. Is it a lease? Yes, I'll look at it. So it's very refreshing to see how they're thinking outside of the box.
Who are they? Give us a couple of names. Come on, you can do that.
Well, I can say Union because they're...
Thanks very much for that, Patrick. and I do agree with that. You know, talking 5 years ago about lease agreement, that was some evil thing in the world, and everybody hated it. But I think we really have a renaissance of the contract form. We are now exceeding the $1 billion mark, investing into hotel assets in the US, doing direct lease agreements there, and having done so in now nearly 5 cities now in the US, we've received a great attention in the market, much more than we have here in the UK. So there's still
Can you bear to name a rival that you like?
Sorry?
Can you bear to name another rival that you think is good at it as well?
Yeah. So therefore, it took us some time to really structure the deals.
What I've seen is that interestingly, apart from Germany, we like some deals with Union, we're signing something with DECA, of course.
Yeah.
But what I have seen, and I'm negotiating a deal in France, is that French institutional investors that never been in the hotel business, either invest in the care homes or different type of assets, they're now coming into the hotel market. So I'm soon, hopefully, if all goes well, we'll be signing an institutional lease with a French care home.
So you can't name them either?
No.
Okay.
No, but we can say that, for example, Swiss Life has done has gotten big on the hotel space. They have dedicated funds for hotels, very specific on the mid-market and on the up-market. We can say that Algonquin has a JV now with Aviva, and they're looking at management agreements. So again, very dedicated vehicle that can do that. Okay. Whereas in the past, this just didn't exist.
Okay. Michelle, did you have you're going to name a few clients here now or not?
Well, I would also say, there's a lot of institutional money coming in at the moment. We're still seeing private equity coming, high net worth individuals. So.
And
I think institutional is a lot of European money. Or Asian. There's still a lot of Asians coming in. With the exception of Chinese at the moment, a little bit.
Okay.
But,
all right. Where's the one spot you'd like to build a hotel? Or would you see it? Would you like to have a hotel? Just go down the panel. We'll start at Patrick's end and come up this way.
Sorry, I only do 50 million and above.
Okay, sorry, I'm not cheapskate. Okay, you've got 50 million. 500 million.
Thank you.
Let's go.
That's much better. Now we can.
500 million. Okay, go for it.
Look, for me, there's never been a right and wrong, and I'm going to sound a bit plain vanilla here.
Hedging now, I can tell.
No. It's really a matter of your cost of capital. It's a matter of what you are looking for as an investor and the way you underwrite, because this is how much you can pay.
But where?
Within Europe, you will find that very few investors take macro bets, specifically in the market today.
Well, let's come down to a minor bet of 50 million then.
No, the bet that they do take is on the asset itself, right? So you can find a hotel, say in Barcelona, that will appeal to a certain type of investor.
Yeah, I see what you mean. It depends on what they're after.
It's very asset specific.
Okay.
Well, again, from my side, I would invest all over Europe because I do think that there's no market where I can say this is where I'll go.
I've just given you 50 million quid. You know, where are you going to put it?
I'll probably put half of it in established European cities, and I'll put the second half in Spanish resorts and the CEE.
Okay, we will go no further than that.
Is
Michelle?
Lyon an established city? And just as an example, because you've been asked about cities, not countries.
So
You know.
I would say that Lyon is less established of a city because international investors won't necessarily know Lyon. At least the bulk of international investors won't necessarily know Lyon. So as such, you know, they want to invest in a place that they know, that they have already been, that they spend some holidays in. And you'll find hotels is quite amusing because sometimes an investor came to me and said, what do you think about the Nordics? And I was like, the Nordics is just barely starting to be on people's radar. Why are you talking to me about the Nordics? And he said, I just spent a week with my family. I found it amazing.
Okay, all right.
It's,
well, let's not go up north. Right, Michelle, here's 50. I'm giving you 50 million quid. Where are you going to put it into a hotel? Which city?
No, well, I think it really depends on whether you want to go safe, and then I think
Well,
I'd
what would
go
you
for
do?
Germany.
It's really what your view is.
Or
You look
risk.
like a woman who'd like to do things safely. So where would you put it to be safe?
To be safe, I think it's in Germany.
In Germany.
Yeah.
And any particular city in Germany?
Well, I think Wiesbaden. No, no, I don't. No, I think, I mean, you have markets such as, I mean, you do have in certain markets like Berlin still a huge supply and influx, also Munich, etc. So I think I'd go somewhere, I know, Hamburg, Munich, something like that.
Yeah. Okay, good. David, what about you?
Well, I sort of agree with Patrick. I mean, I think it does depend on the return you're trying to get for your money.
No, it's you.
And also, well, it depends on what. And also, it is very asset specific.
Yeah.
I mean, the macro is relevant in terms of, you know, you've got to work out how long you're going to hold it, and if you have to hold it longer than you think because of the cycle, then can you hold it that long?
Yeah. Okay.
So that would depend on whether the market. But I think generally, I'd probably steer clear of UK provinces because of all these UK economy and consumer issues. Germany, yes, safe, but I think a lot of our clients would say now Germany, the opportunity's gone. It's very expensive relative to other things. Spain. Clients of ours have done very well in Spain by achieving their sort of 5-year target EBITDA after 2 years and selling on. I think the view is that although that initial growth has gone, there's still a lot more potential there, a lot of family-owned hotels where there's scope to do.
Okay.
Italy, we find, our clients find quite hard to put deals together.
Yeah.
So
Come on, where are you going to put yours then?
Well, I think it would be. There'd have to be. It would be driven by the asset. You know, is there deferred capex? Platform investment.
You're prevaricating, you know that, don't you? Yeah. I'll push you no further. Andreas, you're a rich man. Where are you going to put it?
I would really like to do Hamburg, as that's the city in Germany which has been seen the best or consecutive RevPAR growth over the last 8 years, very constant growth, and a great potential for international business, so it's still lacking international demand.
But there's no international airport, that's the problem with Hamburg.
That's right.
We're now going to finish.
Work that.
The last person I'm going to ask is a woman who's built a boutique hotel in Rwanda. Okay, I've given you another 50 million quid, Asli. Where are you going to put it now?
I will actually put Lyon.
Lyon?
Because, yeah, it's the second biggest powerhouse of France. You know, people underestimate Lyon, but the amount of corporate business and everything you have in the city, it produces is massive. So definitely I will put my money in Lyon, and personal reasons and business reasons, definitely Copenhagen if I can find something at a decent price.
Brilliant.